Well, welcome everybody to the February 2014 Life Insurance Update Show right here on The Biz. My name's Eric Palmer. Thanks for joining us. Now, what I want to talk about in this month's show is I'm going to hone in on a new product. It's a term insurance product called Hybrid, and it's actually a very unique product that's extremely competitive and simplified up to $1 million. I'm also going to hone in on a couple of new Index Universal Life Insurance contracts and to continue on my exploration of these new Guaranteed Index Universal Life contracts, new products that have just hit the marketplace. If you remember last month I was talking about Genworth. This month we've got another two players that we want to hone in on. So first, let's talk about the hybrid term. It's an actual product from Fidelity Life, and the first thing I want to note is a new website that we've put together. It's fidelity500.com. If you go to this website, you're actually going to have the ability to run some quotes. You can learn more about the product. You'll see the different details, see just how competitive this thing really is. Now, let's talk about the coverage here because, again, as I said, this is a very unique term insurance product. We have the ability to issue up to $1 million of face amount, and the initial policy is a blended coverage of accidental death and all-cause death. It's about a 70-30 blend. Now, these policies are originally approved within 24 to 48 hours, and it's through a digital process, MVR, script check, that type of a thing. Your client at that point then has up to 6 months to go take a medical exam. At any point throughout that time that they take this exam, if it comes back unfavorable, they're not actually denied coverage. They have the opportunity to keep that policy in the blended form or go to all-cause coverage with the right amount of premium. However, if it comes back and it matches what we did in digital underwriting, that $1 million or that potential face amount becomes all-cause coverage. So again, once the exam's done, there's no rush to do it. The actual coverage will turn into all-cause and the accidental death drops off. So a very unique product in and of itself. It has a simplified application process. There's a digital app with a digital signature. We also put together a ticket application process. It's a one-pager you take out in the field in case you're not familiar or you don't like to use the digital applications. So a very easy to use product, again, up to $1 million, issued within 24 to 48 hours. Now, when I take a look at comparisons, you'll find that the premium is extremely competitive, which is nice to see because typically with these simplified issue products, they're way overpriced in comparison to your fully underwritten term insurance. So if I take a 45-year-old male, $500,000 of death benefit on a 20-year term, I ran this at preferred non-tobacco, I'm going to see all of the typical players. And again, these companies I'm going to mention here, the fully underwritten term insurance, these are going to be the ones to take a look at here for 2014. So these are the real players. We've got Protective. They come in at just over $63. You've got American General, Banner Life, and of course Genworth over at $64. So not too much of a range in premium, but again, these are the fully underwritten competition for 20-year term at $500,000. But when I take a look at Fidelity's premium, it's $68.30 a month. So I ask you this question, for an extra $4 a month compared to the lowest cost fully underwritten policy, are you willing to look at a product for your client that has no denials due to medical exam results? It has a simplified issue underwriting up to $1 million, 24 to 48 hour approvals. Again, no pressure to rush and go get that medical exam. That's important. That gives your client the chance to lose a little bit of weight, maybe get themselves a little bit healthier before they go take that exam. No medical records, and of course, that simplified application process. So this is truly a really great product to take a look at here in 2014 when you're looking at term insurance. Make sure you're comparing Fidelity to those other companies and potentially throw it in front of your client because they might really appreciate the ease of getting this policy taken care of. So now let's talk about those new guarantees. Again, we see this quite often. It's the guaranteed universal life insurance market sort of re-emerging in this indexed chassis. So we've got indexed universal life contracts that are actually carrying the death benefit out past 100. AXA Equitable and Protective have come out with some brand new products. Last month you heard me talk about Genworth. This month you're going to see me compare these two products. And again, I'm talking about these products because we're seeing so many come into the market. It's important that you know what each of these can do or where they potentially are more strong compared to the rest. So first, let's take a look at AXA. They came out with an IUL. It's called Bright Life. Again, this is designed as a low-cost, death benefit-focused product. The premium solves such as $1 at age 100 will be extremely competitive, but what's really nice is this particular product competes very well to age 121. It has an 8% cap and a 5.54% illustrated rate. Now, what's interesting is you're probably first thinking, well, wait a minute. There's a lot of products out there with 13, 14% caps, much higher illustrated rates. How can this be compared? Well, we're not looking to sell this product for income or some sort of cash value withdrawal. This, again, is something to compare to those no-lapse guarantee type premiums or policies that we're looking for our clients. So what this allows us to do is be extremely competitive, not with just carrying that death benefit at a low premium, but also building up a little bit of cash value in case your client actually needs to get something on a rainy day. So again, 8% cap, 5.54% illustrated rate. Now, What's really nice about this product, it also includes a long-term care rider. So you hear me talk about this quite a bit. The importance of having these long-term care features on these policies is there. Our clients want to hear that they have the living benefits available in these contracts today, so make sure you're adding that when you're running quotes here on the Bright Life product. Now, something that AXA has done that's above and beyond, and I really like this part, is they have a consumer and an agent website available. The agent website provides a lot of training videos and sales tools, but the consumer website is a portal that helps actually educate the consumers about why these products are important today. So make sure you're getting your hands on the URLs for both these sites. If you want the links to these websites, just write us right here. It's info@thebiz.tv. We'll send those links right to you. Now, when I take a look at this product compared to a couple of different things, it's really interesting what we start to see. First, looking at a no-lapse guarantee policy. So we took this AXA Bright Life product, we put it up against some of the major players in the no-lapse guarantee market. We took a 55-year-old preferred male at $1 million of face amount. We're solving for $1,000 of cash to age 121. You're going to see AXA's #1 with the lowest premium and the highest cash value in years 10, 20, and 30. So that's compared to Nationwide, American General, Prudential, Principal. These are major players in the market, and AXA has the lowest premium on an IUL, and again, some pretty significant cash value growth. Carry that death benefit to age 121 at the current rates. When we take a look at a 65-year-old, same preferred, up to $1 million, again, lowest premium, highest cash value. So it's a really nice product when you're doing those comparisons to no-lapse guarantees, or if you need to win a case over because you're competing with another advisor, make sure that you're looking at this AXA Bright Life product, especially with the age 121 indemnity guarantees. Now, when we also take a look at this product compared to the index universal life players out there, you're going to find that it also has some of the lowest premiums to carry that death benefit to age 121. Here we're looking at a 65-year-old preferred non-tobacco up to $1 million of face, and at a 6% rate for the competition, we're still outperforming them at our 5.54% with AXA. So a lower total illustrated rate, and we're outperforming in terms of lowest premium to age 121. So if you're going to quote this stuff, make sure you're including AXA. You're going to find that it's going to be competitive most often for your clients going out to age 121. So now let's take a look at Protective. Now, these products are very similar. They were both designed for low-cost, death benefit focused type of premium. However, the index choice from Protective is going to be a little bit more effective when you're doing those solves to age 90 or age 105. So it's nice that we see the lifetime no lapses available. Again, very competitive if you're solving just to 90 or just to age 105. They have a very strong cash value accumulation, a little bit higher cap. It's a 9.5% on the annual point-to-point. We've got a 6.28% illustrated rate. But what's really nice about this product, it has a 24-month rolling target, and it also includes that extended care rider. So when you're, again, looking at products that are providing the death benefit guarantees, make sure you're including these living benefit or extended long-term care type features, because it's nice for your clients to know that they can get something while they're still alive in the event they need to get their hands on some of the cash. What I like about their rider, it's indemnity. That means it's not going to require the client to come out of pocket and then be reimbursed. It actually will start paying them a benefit if they can't perform 2 out of 6 of the activities of daily living. So very nice, well-rounded product here from Protective. Extremely competitive, as I mentioned before, to age 90 and age 105. So when we're running these quotes, let's make sure that we're looking at Genworth and AXA and Protective. Let's compare them across the board. Depending on what our clients are looking for, you're going to find that these are going to be some of the top 3 guaranteed IULs in the market for 2014. So that kind of wraps it up here for February 2014 Life Insurance Update Show. If you have any questions about what we covered today, if you want to get your hands on some of the numbers, product details, or these web links that I mentioned, just write me. It's info@thebiz.tv, or you can go right to our website. It's www.thebiz.tv, and you can request some more information right there on the site. So again, thanks for joining us here for the Life Insurance Update in February. My name is Eric Palmer, and I'll see you next month.